Assalamualaikum, my name is Ahmad Shafiq bin Ahmad Sufyan and I'm from class VIVA1145C, and for today I will be talking about the financial analysis. I will be starting things off with the analysis of balance sheet. I will be talking about the asset structure of Sarawak Plantation Berhad and its competitor Genting Plantation Berhad. Okay, so let's start things off with Sarawak Plantation Berhad. So for its current assets, it has been seeing a slight increase over the last 4 years, as the current asset in the year 2018 was RM166,218 million, and in the third quarter of 2021 it has increased to a RM250,676 million. So what does this mean? In essence, having substantially more current assets than liability indicates that a business should be able to meet its short-term obligations. And following up to that is the fixed asset of Sarawak Plantation Berhad. So over the years, it has been seeing a declining trend, as in the year 2018 it was at a RM393,286 million, and it has been seeing a decrease, as in the third quarter of 2021 it was at a 268,476 million. So a declining trend in fixed asset may mean that the company is over investing in the property, plant and also equipment. So moving on to Genting Plantation's asset structure. So its current asset has been seeing a slight decrease over the years. As you can see, in 2019 it was 2,493 million and it has been decreasing to a 2,355 million in the third quarter of 2021. So what this means is that maybe Genting Plantation is having a hard time in meeting its short-term obligations. And for its fixed asset, over the years it has been also seeing a slight decline. In the year 2018 it was 4,419 million, and in the third quarter of 2021 it was 4,346 million. So this can also mean that Genting Plantation Berhad is also over investing in the property, plant and equipment of the company. Moving on, now I will be talking about the financial structure of Sarawak Plantation Berhad. So I will be focusing on the stockholders' equity, and over the last 4 years it has been seeing an increase. In the year 2018 it was 535,533 million, and in the third quarter of 2021 it is at a 659,800 million. So compared to its non-current liabilities and also current liabilities in the same year, it is way more than the liabilities. So what does this mean is that Sarawak Plantation Berhad is very good at paying its debts, since the value of the equity of the owner is greater than the liabilities of the company. Okay, moving on, now is the financial structure of Genting Plantations. It is the same case here, as the stockholders' equity of Genting Plantation Berhad has been seeing an increase in the last 4 years, just a slight increase with a 4,312 million in 2018. It increased to a 5,103 in the third quarter of 2021, and compared to its non-current liabilities and current liabilities in the same year, its stockholders' equity is way more than that. So this also means that the company is very good at paying its debts, because since its value of the equity of the owners is greater than the liabilities of the company.
Okay, first thing first, I'm going to talk about ratio analysis. For what you see here, this is a spreadsheet of all the information about Sarawak Plantation from 2018 to 2020. So I'm going to move forward to horizontal analysis. So for horizontal analysis, first thing we're going to talk about liquidity ratio. There's a 3 liquidity ratio. It's a current ratio, quick ratio and net working capital. As you can see, from 2018 to 2020, they are able to maintain their current ratio, quick ratio, and also able to increase their net working capital from 2019 to 2020. For leverage ratio, as we can see, from 2018 to 2020, they are able to reduce all their debt ratio to the balance the balance method and able to increase the time interest earned by a huge margin. So we're going to talk about efficiency ratio. There's actually 6 of efficiency ratio, which is inventory turnover, day to sell inventory, average collection period, average payment period, fixed asset turnover, total asset turnover. As you can see from 2018 to 2020, they are able to improve it time over time, and they are able to increase the efficiency of the company itself. So next one is profitability ratio. So as we can see from 2018 to 2020, they are able to increase all their profitability from gross profit, operational profit, net profit, return on asset, also return on equity. The most we can see from net profit margin and also operating profit margin and also return on equity, we can see a huge leap from 2018 to 2020. Now, last but not least, the market ratio. There's actually 2 in the market ratio, earning per share and also dividend per share. As we can see from 2018 to 2020, they're able to increase their earning per share from 0.04 to 0.22. Meanwhile, for dividend per share, they're able to increase the dividend per share from 0.05 to 0.1, which is very impressive. That's all for me, and I will...
Hello and Assalamualaikum. My name is Teko Dito from TBA1145C, and right now I'm going to talk about the topic vertical analysis. It is the comparison between our own main stocks, Sarawak Plantation, and our competitor, which is Genting Plantation. The first one is liquidity ratio. As you can see, based on the chart above, the liquidity ratio refers to the firm's ability to meet short-term financial obligations. As you can see, the current ratio for Sarawak is 1.33 and Genting being 2.85. In the quick ratio, the next one for the quick ratio is Sarawak being 1.2 and Genting being 2.55. And the last one is net working capital current liabilities. Sarawak being 42.88 and Genting being 44.89. Okay, in conclusion, this shows that Genting has better liquidity than Sarawak because it is able to pay its short-term obligations. Okay, for the next one is the efficiency ratio. For the efficiency ratio, Sarawak and Genting Plantation shows whether the assets are too low or too high or reasonable for the firm's current and project operating levels. For the Sarawak efficiency ratio, for the first one is inventory turnover. Sarawak being higher with 21.18 times. 21.18 times, and Genting being at 18.28 times. For the average payment period for Sarawak is has around 2 days difference, being at 17.24 days, and Genting being around 19.33 days. So there's a difference around 2 days between them. For the fixed assets turnover is 148.65, and for the Genting is slower in being 120.53 times, and the last one is total assets turnover being at 1.62 for Sarawak and Genting lower with 1.45. Sarawak Plantation has a very stable efficiency of the firm assets to generate sales compared to Genting. And for the next one is the leverage ratio. The leverage ratio describes whether the company uses more debt or equity in the financial part. So it measures the ability of the firm service its debt obligations. As you can see from the bar chart, the debt ratio of Sarawak is 12.1 and Genting being higher with 21.2. The next one is debt to equity ratios. Sarawak being 23.9 and Genting higher with 40.3. For the long-term debt to equity ratios, it shows that Sarawak is lower with 8.85 and Sarawak being higher with 17.65. For the time interest earned is Sarawak being a lot higher with 52.11 times and Genting 7.82 times. The interest earned shows that Sarawak has higher ratio and is favorable as it shows the ability to pay faster than Genting plantation. So Sarawak has better handle towards their debt compared to Genting. Okay, we continue with the profitability ratio. The profitability ratio describes the rate of profitability created on the sales. As you can see from the bar chart, the gross profit margin for Sarawak is 21.18 and Genting lower with 16.67, and net profit margin all of this is in percentage by the way, and the net profit margin is 17.24 and Genting at 12.45, also lower compared to Sarawak. And the return on assets is 17.24 and Genting being at 8.05. The return on equity is 48.65 compared to 29.55 with Genting. Sarawak can generate higher profit from Genting as well as generating high return from assets equity investments as it's higher profitability compared to Genting. Okay, for the last one is the market ratio. For the market ratio, based on the bar chart, shows that the earnings per share of Sarawak is lower with 0.22 and Genting being at 0.3. For the dividend per share is 0.1 and also the same being with Genting at 0.1. The market ratio describes the portion of total profits, dividends and equity when it's allocated to each share of stock. So the Sarawak plantation has about the same earnings per share with Genting. This means that Genting pays about the same of its earning as Sarawak. That's all from me. Thank you.
Now, we will proceed with the risk analysis. As we can see, overall performance was led by Sarawak Plantation Berhad. And as we all know, in order to invest in a company, we must look at the CV, which is coefficient of variation. In this risk analysis, it shows that the CV for Sarawak Plantation Berhad is lower than Genting Plantation, which is negative 12.1974 and 3.898681 for Sarawak Plantation Berhad. Therefore, we will recommend investor or retailer who interested to invest in Sarawak Plantation Berhad because it has a lower risk. However, the covariance for Genting Plantation is lower than the Sarawak Plantation Berhad. To proceed with, after taking all factors in consideration, we would recommend Sarawak Plantation Berhad rather than Genting Plantation for investors to invest in. Now, we will proceed with the regression analysis. We can see from the chart above, both company has a positive relationship with the KLCI. To conclude, if the investor is a high risk taker, they may invest in the Genting Plantation Berhad because some of them prefer to invest in a high risk stock in order to gain a higher profits. However, we recommend to invest in Sarawak Plantation Berhad because it has a lower risk. Now, I will talk about company's intrinsic value for Sarawak Plantation Berhad. Based on the stock evaluation, the company's intrinsic value is at RM2.488. However, the market price of Sarawak Plantation Berhad stock is at RM2.480. which means it is sold lower than its intrinsic value, thus making it underpriced and undervalued. When the price is lower than its intrinsic value, it is recommended to buy the stock. Next, for the Genting Plantation, based on the stock evaluation, the company's intrinsic value is at RM6.7353. However, the market price of Genting Plantation stock is RM6.720, which means it is sold lower than its intrinsic value, thus making it underpriced and undervalued. When the price is lower than its intrinsic value, it is also recommended to buy the stock. Now I will be talking about the Sarawak Plantation's trend line. So as you can see on the graph above, in the early months of 2018 until July 2019, Sarawak Plantation Berhad had been experiencing a downtrend. So what happened during this is a declining price combined with increasing supply is going to be very bearish and shows the strong resolve of the sellers. As long as prices remain below the downtrend line, the downtrend is solid and intact. Following up to that, from the March of 2020 to June 2021, Sarawak Plantation Berhad had a positive uptrend. So what happened during this is a rising price combined with increasing demand is going to be very bullish and shows a strong determination on the part of the buyers. Next, we will be talking about the Genting Plantation trend line. So as you can see, during the month of May 2020 until December 2020, a sideways trend, or also known as a horizontal trend, can be seen. So next is during the month of January 2021 until May 2021, Genting Plantation Berhad had been seeing a trend of double top. Double top signals areas where the market has made two unsuccessful attempts to break through a support or resistance level. In the case of a double top, which often looks like the letter M, an initial push up to a resistance level is followed by a second failed attempt, resulting in a trend reversal.
To KLCI versus Sarawak Plantation, as you can see in the graph, shows the correlation between the price movement of Sarawak Plantation and KLCI index. The blue line represents Sarawak Plantation Berhad and the red line represents KLCI index. The time frame for this chart was set for an intermediate period and the movement was based on weekly changes. The Sarawak Plantation Berhad price movement has been dropping over the month, and this also can be validated by the facts that the valuation of plantation stocks on Bursa Malaysia will likely remain held back. It is definitely caused by environmental, social, governance concerns moving forward. From the beginning of December until the middle of the month, both lines for Sarawak Plantation Berhad and KLCI indicate modest retracement. This might be because the number of COVID-19 cases in Malaysia has increased at an alarming rate, scaring investors who were already concerned about the central bank's decision, which is due to be released this week. Sarawak Plantation has been a considerable resurgence in the market since the 22nd of December. As window dressing operations happen in Bursa, where most portfolio managers seek to enhance the look of the fund's performance before presenting to their clients, mood during the end of the year heavily caused the movement to be erratic. So we're going to proceed to intermediate, which is the period is between 1 February 2021 until 31st December 2021. The two charts above display the price movement for both KLCI index and Genting Plantation Berhad's share price from the from the start of February 2021 until the end of December 2021. The time frame for this chart was set for an intermediate period, and the movement was based on weekly changes. As you can see, the price movement of Genting Plantation was fairly close, but it later drastically dropped in February, and later continued to drop again until August 2021. It later had a rapid resurgence, but later still dropped and has been since until 31st of December 2021. The major factor of these things happened mainly because of COVID-19 lockdown that has been happened in Malaysia during March 2021 until June 2021. In addition to that, Genting has started the year with a bad start, as it registered RM1 billion loss in the whole 2020, and it flagged for a lot of uncertainty for the upcoming months. Thank you.
5.4 Indicator RSI. The Relative Strength Index is a technical analysis indicator that examines the size of recent price fluctuations to determine if a stock or other asset is overbought or oversold. Based on the chart for Sarawak Plantation, May of 2021, the RSI percentage was at 70.81% and crossed the yellow line, indicating a strong sell signal. Meanwhile, for Genting Plantation, August 2021, the RSI indicator shows a buy signal because the line is below 30 and is crossing the yellow line. MACD. MACD is a short form for Moving Average Convergence Divergence, which is a trend following momentum indicator that displays the relationship between two securities price moving average. Based on the graph for Sarawak Plantation Berhad, the MACD indicator had a crossing above zero line on November, changing from buy signal to sell signal due to price drop. For Genting Plantation, the MACD indicator shows that there is a buy signal before the intermediate term begins on 1 September and nothing after. ROC. The price rate of change is a momentum-based technical indicator that calculates the percentage change in price between the current price and a previous price. Intermediate term for Sarawak Plantation, the ROC shows a sell signal for the investor on September 2021 because the value is greater than the zero line. Meanwhile, on Genting Plantation, the ROC value is greater than zero. The price starts going down and shows a sell signal for the investor. Stochastic. A stochastic oscillator is a momentum indicator comparing a particular closing price of a security to a range of its prices over a certain period of time. Based on the graph, the Sarawak Plantation, there are 3 buy signals and 1 sell signals at the end of December. Meanwhile, there is 4 buy signals for Genting. It means the %K line crossed above %D line at under 20 line. Middle of October, the oscillator shows 2 sell signals because the %K line crosses below the %D line above the 80% line. Williams %R. Williams %R, also known as Williams % range, is a momentum indicator that measures overbought and oversold level and most a move between 0 and negative 100. Based on the graph Sarawak Plantation, there are 1 buy and 2 sell signals in the line graph. Meanwhile, for Genting Plantation, there are 1 buy signals and 1 sell signal. SMA, a simple moving average, calculates the average of a selected range of prices, usually closing prices, by the number of periods in that range. As the chart suggests for Sarawak Plantation, early signal indicates buying signal. Meanwhile, Genting Plantation, from early March until early August, it shows the stock have been in a downtrend, an uptrend and downtrend again until 31 December 2021. Indicator conclusion. Technical analysis is critical when deciding which stock to buy in the future. It studies the price changes in the market movement to determine whether the price is going to rise high or drop low. Technical analysis makes uses of historical price to forecast future prices based on the indicator signal. Some of the indicators that we have covered are SMA, MACD, RSI, Williams percent R, stochastic, and ROC. 5.5 Analysis of indicator signal. Based on the technical analysis that has been analyzed, shrub plantation berhad stock prices are expected to drop a little for a few months before the price are rising to move upward. According to the short term, the indicators show that the signal indicates a buy signal. Meanwhile, according to the intermediate, the indicators showing that the signal are continue to be a sell signal till early 2022. Thank you for watching.